right, welcome back to Protect the Pile, the no-nonsense investment show where we cut through the market noise with a panel of seasoned practitioners. We'll be dissecting the current landscape and debating some of the opportunities and risks out there and helping you navigate the markets using Hedgeye's risk framework and the collective experience of the group here. I am Patrick Kent, or RPK, of Hedgeye Asset Management, and with me, as always, is Sam Rahman. And today we have David Salem, also portfolio manager and colleague at Hedgeye Asset Management, and special guest Neil Howe, who works very closely with me, also a colleague and portfolio manager at Hedgeye Asset Management. How you guys doing?
Very well. Good
Great,
morning.
great, Pat.
All right. So just level setting at the start, we are recording on February 6th. And with all the Sturm and Drang out there, the S&P 500 is sitting a little over 1% off the all-time high. So, and as you know, I think I said this on the last one, when I had almost the exact same intro statement, Keith, as Keith would say, all time is a long time. So a lot of interesting stuff out there. So I was jotting down a few things in the notebook. I mean, breadth is generally pretty good across S&P, Russell 2000. NASDAQ, not so much. So you have, using at least looking at percentage of stocks that are above their the 200-day, or as we at Hedgeye affectionately call it, the moving monkey. Mostly over 60% of stocks still above that. And in the NASDAQ, you're actually seeing that at roughly 40%. So interesting split between the two, and obviously that has a lot to do with the Nasdaq's exposure to Mag 7, but also a lot of technology heavily weighted in there. So volatility still hovering around the chop bucket as we record. Sentiment pulled back to much more neutral if you look at sort of the bull bear kind of ways of thinking about it. Skew, which is more sort of like the puts calls, what people are doing, not what they're saying. That actually looks a lot more fearful as of the last couple of days with some significant put buying going on. Just as an economic backdrop, we can talk a bit of it. Implied inflation, I was looking at this today. So implied inflation, if you look at the tips, is at 2.3%. Trueflation, which is sort of that real-time aggregated price indicator, is running at 1% versus like CPI at 2.7%. Food commodities are actually down 12% year over year. Gasoline prices are down 8% year to year. So that does seem to be, especially when you combine this with the economic backdrop of like the PMIs, both manufacturing services now back above 50, and jobless claims near the low, seems like very much quad one backdrop still at the moment. The dollar is down, I think 1% year to date, down 8% year to year. And that is kind of driving like the energy breakout that we've seen. I know Keith's talked a lot about being bullish energy recently. I know, we've got some exposure there. So yeah, a lot to talk about, but that's sort of the backdrop. Still seems like very much quad one, despite the worries about the Warsh possible appointment to the Fed. It is liquidity is still pretty loose out there. We've got, and I have 3-month annualized liquidity growing at close to 12%, and year to year it's up 10%. So that's my backdrop, laying the setting the table. We can talk from there. We can maybe open up a little bit before we get into the formal topics. And I'll let I don't know, pick at random here. I don't know, David, if you had some thoughts, you wanted to add some color on what's going on the international side as well.
I'm so glad you said that, Patrick, because I was going to kind of tease you by saying, why are your comments so overwhelmingly U.S. centric? And we all know the reason why. We know the reason why, and we get it a lot in the capital allocation team, to the point where when we set up the model portfolio construct now going on about a year ago, and it's worked very, very well, we were forced sort of by business dictate to set up a separate kind of U.S. centric versions, plural, of our otherwise go anywhere but not everywhere portfolios. And so if you ask me, okay, as between the US on the one hand and everything else in the world on the other, rest of the world, how are you guys positioned? And we're as we speak, we're promulgating the first changes in the model portfolios that we've adopted since December 3rd. So we've gone a really long while here with making no changes whatsoever. The changes reaffirm our position that while we have, material exposure to the U.S. stock market, select sectors within the U.S. stock market, we're as overweighted to non-U.S. markets as our guidelines and mandate permit. And that is not at all based on this sell America thing of any kind. It's rather based on the quantum mental process that we use that you're all familiar with. So the signals and the quads, or the signals front running the quads. So we've got material bets on Japan, on South Korea, on Latin America. I could go right on down the list. Our capital allocation subscribers are familiar with what we've done. But yeah, it's looking like if we had to sort of in a single sentence say, okay, we get it, but given that you've got a relatively long-term purview for what you're doing, David, what's sort of your overall outlook for the rest of 2026? And that's where the words that you used just a minute ago, you said quad one, you meant the US, but it's kind of generally benign quad one or quad two like backdrops for much of the rest of the world, which explains why we are sort of unfurling the sails and, or as Druckenmiller says, spreading the wings with a lot of those exposures and trying to look beyond the hiccups like we saw yesterday. I think a lot of people, certainly with a US-centric focus, were pretty rattled yesterday, and we were, as we say in my team, just chilling. And I'll stop right there. Back to you.
Well, I mean, it's a good. All right, so there's a couple of things that come to mind there. I mean, one, each one of these sell-offs the last few weeks has generally been led by the worst performing things being momentum, earnings revision, positive earnings revision,
Yeah.
right? And growth. Now, understandably, those are very like can be very crowded factors, but also I'd point out that those are the best performing factors in the market over 1, 3, 5, 10, and like 20 years. So generally, because that's, I mean, that's intuitive. Generally, you want to own stocks where earnings are going up. You want to own stocks that are growing, right? And you definitely, and you'd like to, all things being equal, be exposed to the ones that are going up, not down, right? So,
Yeah.
so when you put all those together, it's like, yeah, that makes sense that those would be factors that generally lead the market on a most of the time. However, like we've definitely seen each time we've had one of these volatility spikes and sell off, those instantly get back. So it just leads me to think that it has a lot to do with degrossing, regrossing, positioning. Like it's not that there's not a lot that's necessarily a fundamental shift underneath the market current. That was maybe one point. And then I'm going to kick this over to Sam because I'm going to get this to the Mag 7 and I want to get his thoughts here. Interesting that internationally, when I like, and I don't have any data to back this up, but I know I'm pretty sure this is right, and you can correct me if I'm wrong. A lot of capital has been flowing into the US and disproportionately going to the Mag 7, which has driven a lot of that concentration within these. And now for the first time in a long time, we're having real questions about both the capital intensity of these businesses and then just not really understanding what the future profitability of what they're spending the money will be on. And so there's just, it's causing like a crack up, it seems like in the Mag 7 where we're getting a very much like where they were uniformly working, they're now not uniformly working anymore. And that leads me to think of that has something a little bit to your point. That doesn't have to be the dollarization, debasement trade or something that people, but it's just literally that like, well, we go to the most liquid things in the US. And now that at the margin, we're moving out of those because those aren't working and we're repatriating going back to home and like buying what looks good, especially given your point, the global backdrop is generally benign. Maybe
I'll
Sam
just
will
comment
piggyback
really
on that too.
briefly because I want to hear from Sam and Neil as well, Patrick. But
Yeah.
one of the most memorable conversations with respect to investing I've ever had was with a gentleman, very accomplished money manager named Stephen Butt, who drew my attention originally for the first time in my career to the work of Edwin de Bono, the founder of lateral thinking. And de Bono had a sort of a way of looking at the world. He said, think about a jigsaw puzzle where you don't have the cover of the puzzle and you don't know whether you're doing like a fruitscape or a landscape, right? And you think, okay, I'm building, as you put the pieces of the puzzle together, you think, oh, this is a basket of fruit. And then a single piece arrives that causes you to say, no, wait a minute, this is actually a scene of a mountain, right? And you completely rearrange your mental construct, right? That happens all the time in investing, not every day, but I think that's actually what's happened with the hyperscalers, right? A piece of the puzzle arrived that caused investors as a group to start to look at this in a completely rearranged manner. So I find that quite striking. Anyhow, I'll hush up there and turn it over to Sam.
Yeah, Sam, thoughts on that?
Yeah, I think it's really just I mean part of the magnification of why the sort of the Mag 7 has been underperforming is that you got two forms of rotation going on in the market. I mean, David touched on one earlier, which is um, a cyclical recovery in international markets that have been for a while, relatively under allocated to. So you have that going on. Shifting money away from allocations that were more US centric to more international. And then within the United States, you have a rotation from sort of the large cap growth names to more cyclical names where you're seeing a recovery in the underlying sort of components of the US economy. It's going to be somewhat supercharged by the tax bill that's going to really start to kick in the next few weeks and months. So you got two rotational factors that are large in size. So and then you throw in just the structural debate dynamics with regards to AI, and you have a recipe for money moving out of a handful of stocks that are big caps, so a lot of dollars there, and moving to other areas. So that in it of itself is not terribly surprising. I think the bigger question is, the existential question, like, is this investment going to be ROI positive? And I think that debate is, I don't want to say it's a dumb debate, but it's just such a not helpful debate to what's going on. I mean, when the cloud businesses were being built 10 years ago, Microsoft's margins were on the specific business were negative. Amazon AWS, when they were building it out, was you couldn't see it in Amazon's P&L, but that business was a negative margin business. Now it's a highly profitable business for Amazon. So I think what's different now is that in that example, you had a couple of guys, really sort of building the business out. Now you have 4, 5, 6 companies trying to build it out. And as I spoke to when I spoke to Andrew Friedman about this, when we did a conversation about this, that it's only going to work for the companies that have the three key pillars that will make these businesses profitable in the future. I mean, do you have the computer infrastructure, which some have and some are trying to build? Do you have a unique set of data that you can train on and that you can create products for your customers that are going to be, unique and in demand? And then, thirdly, do you have distribution? Can you actually distribute the product at a very low cost to a wide range of consumers? And those three things I think are needed to be successful. And you need to look at the Mag 7, it's a small number that can do that. So I think those structural competitive dynamics and the recipes for success or failure are there, which is why you're seeing so much dispersion. But I think that the sort of near-term factors are more what David was talking about earlier, is like there's attractive things going on internationally. There's attractive things going in small cap names. So like just on that alone, like, I'm going to go to where momentum is starting to really turn versus where momentum was like a year ago, 2 years ago. But love to hear what Neil says, because he's got some pretty interesting ideas about AI and the future.
Well, yeah, I thank you for saying interesting. Some people
Always
have used
interesting.
other
Come
words.
on.
Some people have used other words. Look, I think what's interesting this last week is the emergence of Anthropic, right, and their business-focused model. I think that was a big news this week. The new Claude version coming out and dazzling everyone. And I sense a gradual narrowing of the focus of AI, right? Instead of this huge thing is going to change everyone, suddenly, oh, wait, maybe that's not going to make a lot of money after all. We really need to focus on what's going to actually work. And that's, I think, changing a little bit well, I hate to use the word vibe here, since many meanings of vibe, but it's changing the vibe around it. One thing I wanted to talk about here, taking a broader view, we only mentioned currency, FX, in passing. But I think we need to pay more attention to that. We've seen a very strange thing happen recently where you have the systematic, and by the way, I think on the broad issue of what these last few days represent, it's kind of like a little bit of a, Gothic horror movie in the middle of a pretty nice time, for the economy. I think given the tax cuts, what the Fed is likely to do, the tariff rebates, I mean, what everything is politically going to go on. This is going to be a very stimulative era. I always like it when Patrick starts by talking about this enormous ongoing growth in liquidity. And I think a lot of that is generated by politics. This is likely to be a pretty good time. But what's interesting is when you have these white knuckle moments, like the last week, you find that the market is going down while the dollar is going up. And when the dollar continues to go down, the market then recovers again, right? This is not typical. If you go back and look, this is not, in fact, when the market really goes down, the dollar always goes up, right? I mean, we know that. And anyone who recalls some of the real crashes in the past can certainly recall that. And I think that says something, I think, which is more of a secular trend. And that is that in this new era where we are, shutting down globalization, shutting down global capital flows, everyone is resource hoarding. We're moving into this new, and, Prime Minister Carney talked about it at Davos. Everyone's been talking about this, that the United States is going to have to move into this era in which if we're going to start being self-sufficient, it's going to necessarily mean two things. The dollar is going to be lower and interest rates are going to be higher, right? Because we don't do our own savings in this country, and we're going to start having to do our own savings. That's going to force our hand in fiscal policy, which I think is the guiding force between this whole dynamic, right? It's the only reason why we enjoy such a high dollar and such low interest rates as the rest of the world, systematically. Is a net lender to us year after year after year after year. And I think that we forget this. This is a structural reality, and this is a structural shift. How much is the dollar down, Patrick, again, since the beginning of Trump's?
Oh, well, it's down 1% year to date this year. It's down 8% year over year.
8% down year over year. So I think that this is an important secular trend, unless global politics and everything are going to shift in a different direction. I think that's, I think that's something we're going to have to get used to. And, I don't know. I don't know if anyone else has any comments about that, but it strikes me that these, now it's also interesting that interest rates haven't changed too much on these things, right? Isn't that right? Patrick, you track these numbers really well.
Yeah, I mean, we've been kind of bumping around the same levels for a while.
TLT hasn't changed very much. And the short term, there's not been some huge infusion into the 2-year or anything like that. So it's interesting to me. And I was wondering if any of you had any comments about this recent systematic, very strong negative correlation between the dollar and the market. Plus, and then I'll pass it back to anyone who wants to talk. I totally agree with David. I think that the huge opportunity now abroad for two basic reasons. One, as I just discussed, I mean, if the dollar is heading down, it means all these foreign assets are going to be worth more in dollar terms. And second, as we all know, the valuations are so much more compressed abroad. I don't know, David, you probably have the numbers on this, but if you're looking at PE ratios or even CAPE ratios, the cyclically adjusted PE ratios around the world, they're like 50% lower than they are in the US. So you just see this enormous structural potential for growth there.
Yeah, and in some cases, of course, that discount is highly justified, if not.
Well, I understand there's a reason why the U.S. economy has functioned better. But nonetheless, these are extraordinary on an historical basis. These are very large discounts abroad.
Yeah. Can I just jump in, Patrick, to just say I don't want to be pedantic, but I rather want to be provocative to say
Please.
whenever, certainly within my team, when we talk about the dollar, right, I try to always say don't overgeneralize and say, well, like you just quoted a statistic saying the dollar's down in response to a question from Neil. I think you said
Yeah, the
10%.
trade weighted basket. Yeah. So we're not
That's the
talking about
key
the
point I'm
specific
driving
crosses.
at.
Yep, that's
That's
right.
a particular basket that's trade weighted, meaning it's backward looking function of the exchange of goods and services, mostly goods, with other nations, right? The dollar's not down 10% over the last year against gold, right? Right? Or shares of Microsoft, right? You can denominate dollars in anything, right? And Neil kind of highlighted this because he was highlighting FX ratios, right? What does FX mean? Foreign exchange rate, right? What can I exchange your dollar for? And I think it's really behooves us, certainly as professional investors, to be very precise when we think about the dollar's value rising or falling in relation to precisely what, over what time horizon. And because it really makes a huge difference. And that gets us to the question that Neil just put on the table of correlations, right? My view of correlation, short, medium, and long term, is that they are wildly both varying and hence impossible to forecast. And we try to manage money in a manner that reflects that agnosticism about those correlations between the dollar. And we see it every day in the chart that's shown in the macro show, right? Where you see that shifting green, red, and other coloration.
David, when you say that correlations mean nothing, beyond one day, you're basically saying throw out everything you know about mean variance finance theory, right?
Yes. Yes.
Right.
And I've basically, Neil, built my entire career on that premise. Throw it out.
I'm somewhat partial to that view. Semi strong form a subscriber to that view, I guess.
It's worked for me. It continues to work. Yeah.
Risk models are somewhat useful, but generally all wrong is sort of the way I've kind of always thought of it. But as you often do, David, you by accident or design, you often create great segues. And one cross that the dollar is definitely appreciated against of late is Bitcoin and Ethereum and various other crypto, as we've seen, quite a crack up there, which is sort of, I find it fascinating that that's happening now. And actually, maybe this is the accident portion of this segue, because that correlation between Bitcoin and tech has been very, very high. And so it's interesting to see that as technology and the NASDAQ is rolling over, that now we're getting this kind of a correction, crash, whatever we want to call it, inside of things like Bitcoin and Ethereum. I call those out because they're the two biggest, obviously, of crypto. But I mentioned this, I said this to Sam yesterday on when we were just texting back and forth. Well, I look at the top 10, the market caps of the top 10 most traded crypto. I mean, from October to now, $2 trillion has come out of that. And my question, and I'm going to give it to you guys to tell me because I can't figure it out, is where does it go? So, I mean, and what is the velocity of money on these things? Have they been kind of just storing up, and actually that's positive for liquidity because it'll come back out and maybe it temporarily goes to cash, but then we'll get redeployed elsewhere, or maybe back into crypto. But I'm kind of just curious to open it up and have you guys I don't know, kick that around a little bit. Sam, I don't know if you have any thoughts.
Yeah, I think what's surprising, just going back to your setup about the surprising circumstance of it. I think the other thing that where there's been correlation with Bitcoin and the crypto stuff is with liquidity. And as you said earlier, liquidity has been pretty good year to date and for the last few weeks and months. So to see crypto implode like this in that backdrop, that I think is probably the most surprising thing. In terms of where it goes, I'm wondering just whether it just has a very deflationary or disinflationary impact, because I'm just thinking about a lot of long-term, religious bulls in crypto and Bitcoin that have this, hope, just shockingly on leverage, or part of their book that is just now imploding. So you're covering, you've lost a lot of money, and to cover any losses, you are having to sell something else. But net, your net wealth just went down. So I wonder, like that cohort of the population that were fanatical about this stuff, and I'm thinking more like retail and consumer, they're going to come out of this with a pocketbook that's a lot smaller. And so their predilection to do something else with it, they're going to be doing it with a smaller pile. And their risk sort of makeup is going to be vastly different than a few weeks ago. So it could have a disinflationary, deflationary sort of underlying current that will feed into a bunch of other disinflationary things that are already happening in the economy. So, I think we were talking about this earlier, or Keith talked about this earlier in the call, that this kind of underlying K-shaped makeup of the economy where the bottom of the K is just, was already seething with resentment for the establishment. Now their one sort of, F you to the man asset is just getting torched. So
Sam,
sorry, Neil.
absolutely. Let me pick up on that resentment. I do think there's actually a political dimension of this, right? Disillusionment. You remember back several years ago when Paul Krugman and Larry Summers and all the people who were supposed to really know, the experts were telling all these Americans who were investing in crypto how stupid they were. One of the big rumors that was around about 5 or 6 months ago was when crypto started to sort of show some declines, was that some of the early founders, maybe Satoshi himself, or who knows, were actually selling their assets, right? So the early people who had, I don't know, tens of billions, right, were actually beginning to sell. And now for those people to sell and now to see this result is going to be radicalizing for this group. You remember that Donald Trump made his decision about a year and a half before he ran for his second term to come out strongly in support of the whole crypto community. Whether or not they'd committed crimes or not, didn't matter. All is forgiven, and he's kind of tied to this now. And it's going to be interesting to see how he responds. Clearly, there's not a lot he can do, but I think it's going to be interesting to watch because a lot of the, this is the other side of the digital community, not the titans in Silicon Valley, but a lot of the ones who don't have a lot of money, who invested heavily in this as their alternative way out of the system, which they believed was corrupt, along with Donald Trump.
That's a fascinating point, because at the risk of taking us into territory I don't want to spend too much time in, I wonder what the Venn diagram of Bitcoin hodlers and Epstein file, people are, right? That there's a sort of an interest in the people who are really like anti-elite, right? That were sort of voting with this, and then they're gonna, does this feed, to your point, does this feed kind of a like, they got us with this too, right?
Yeah,
Like
they got us with this too. Absolutely. I mean, here they found another way, and then I think they are really going to be looking to the president. What are you going to do to protect us? We believed in this, and you endorsed our vision. You remember, because Trump went to all these crypto conferences, in his reelection campaign, and said, "I think this is great. This is the new America." And it's interesting because President Trump likes to endorse, he doesn't want any price to change on anything. He wants people who have expensive houses for their prices to stay expensive. And he wants the market to stay up so that those people, and he wants young people to be able to afford housing and the market too. In other words, he has all these possibly mutually contradictory things that he wants to happen. He doesn't want anyone to be a loser, but there is a lot in the financial world, as in the economic world, is necessarily zero sum.
Have you had any want to pick this up at all? I know, obviously, I think, David, you've had You've had some of the crypto or Bitcoin, think specifically, right, in the model. Have you had it in the model portfolio or capital allocation in the past?
Well, it's in the universe. It's been in the model portfolios and even in the ETF very briefly, just based strictly on the signals, but the half-life wasn't very prolonged.
Yeah.
And there's no exposure to crypto, at least directly at this point.
Yeah, I mean,
Yeah.
I don't have a strong form opinion on it one way or
Yeah.
the other. I've sort of been curious more about I feel like all of the things that, all of the arguments for Bitcoin, Sam, tell me if I'm totally like off base here. But I feel like a lot of the arguments for Bitcoin are actually stronger arguments for um, the like USDT or Tether, like the what's the term?
Stables.
Thank you, stable coins. I was like looking, the lazy Susan in my head was going around. I was trying to look for the word, but there, yeah, stable coins, right? Because that's where like this sort of frictionless ability to move capital around the world, that you could have these ways of like, an underlying basket that could effectively change and be somewhat more stable relative to the any sort of fiat currency manipulation, versus this kind of, you know, the Bitcoin case, which is extremely energy intensive and very expensive to do anything in. Like, I don't know, Sam, so do you have any thoughts
Yeah,
on this?
I think it's a really good point, Patrick. I think yeah, if and when we see the stablecoin legislation that is in the pipeline, that gives you a encrypted sort of token or currency where you can transact instantaneously. There's a reason why some of these big banks like JP Morgan are really doing a lot of work into creating, JP Morgan's version of the stablecoin, so that because they know that if they didn't do this, that that instantaneous point-to-point transaction has the risk, theoretically, in a way, to disintermediate the banking system. So they want to be part of it, so that they can anchor themselves like Visa, Mastercard too, because it is potentially a theoretical risk for those networks too. But to your point on crypto, you take the encryption benefits and the security and the single ownership of crypto, and now you add the instantaneous transaction, which crypto was never able to do. So, that's a good point. Is some of this somewhat sort of foreshadowing, the real adoption of stable coins, which you could make the case kind of takes a big leg of the stool out from under crypto and Bitcoin. But I think broadly speaking, I mean, I kind of always understood a little bit about crypto. I mean, that stuff is crazy stuff. But Bitcoin, I could understand the rationale behind it, but I never thought it was ever a replacement for gold. So I never got that part of it, just intellectually and practically.
Yeah, and
So
interestingly, the
yeah,
Tether is one of the bigger. It holds a lot of gold, right? Tether's actually has
yeah,
bought a lot of gold over the last
correct.
couple of years. So that's actually kind of almost coming full circle to tying this. If sort of saying like if central banks want to have a gold standard, then we'll create a liquid coin that it is.
The
And,
fundamental,
and Tether also has been a massive buyer of treasuries.
Yeah,
yeah,
yeah.
So
but
Sorry,
that's
Neil, did you have a?
surprising, but they clearly are trying to use both those assets to completely foundationally backstop their stable coin. I'm sure Circle's version of it,
Yeah,
the USD coin will
similarly,
try
yeah,
to do the same thing.
yeah. So Neil, did you have a point there?
uh, the fundamental point of the fundamental problem of stable coins is that it has to be integrated somehow into a national regulatory system. Every nation is going to demand regulation of its own banking system. And I don't know if you saw in the committee hearings a couple of weeks ago, the banks were crying holy murder, that the stable coins wanted to be allowed to give any interest, on deposits where the banks are wholly regulated. And again, you come across this problem of moral hazard. Are we setting up another GFC, you know,
Yeah,
another.
I mean, well, certainly, right? That's it was two things. Like, the banks, of course, are going to squeal because one, you'd lose your deposit, some of your
But
deposit
I
base, but
know
two,
I
you lose your
understand.
cross-border currency transactions, which
Well,
are very
yes,
profitable as
you lose
well, right?
that, and everyone know that that's a privilege that the banks love. Okay, so I totally get that. In a rational world, that would be erased. But the problem is the banks have to do a lot of other things. They have to be able to they have to comply with these moral hazard regulations, deposit insurance, all the rest, and most of all, they have to know their customer.
Yeah.
I mean, this is something that stablecoin, they go from country to country. I mean, they're not bound by any of these regulations. God knows, you know, what's in them, and God knows whether they're investing in treasury bills, as Stamp says, is it true? Now, that would be a net benefit to the U.S. if
Yes.
if they were originally gangsters holding it in Benjamins, you know, in which case they really are shifting. But of course, many of them may have just been in money market funds, which is backed by treasuries, to a stablecoin bank by trade, in which case it's a net wash, right? But if the idea is that the whole purpose is to we're going to get a huge net benefit to the U.S. Long-term interest rates by enabling gangsters around the world to go legit. I mean, you really have to think about this. I mean, this is what we're essentially doing. And I just think there is a political problem. And once you get to how are we going to regulate our banks? I don't know any country around the world that says, oh, we don't really care, right? I mean, look what's happening already with private credit in end running around the banks. Of course, in some cases, the banks themselves are actually funding the private credit, which actually raises even more questions. Why are we going to get into private credit, Patrick?
Oh, we can circle back there. I've got a section at the end here. You can get into that if you want to get into it. I mean, before we go there though, I wanted to just like open up sort of a broader topic for you that you could sort of throw out, because I had just sort of put in the show map, like, you know, current sort of things like fourth turning things that you've been thinking about recently or been writing about recently in some of your, you know, either your Substack missives or their podcasts that you've talked about.
You know, two things on my mind lately. One is the shift of gears that we're going to go through over this next year. We've been talking about this as a very sunny mood, maybe a prolonged quad one, right? With this higher liquidity, possibly a little bit of further decline in US dollar, and just maybe a cut or two by the Fed. Who knows, right? We'll see. But the point is, it's going to look good. But then what's going to happen as the angst surrounding the midterms builds up, right? It's going to be a real shift of gears because obviously America is going to panic about this coming election. It's all been in the newspapers, right? Is Trump going to allow the GOP to lose the House? I think that's the number one concern. Because if he does, he is expecting to be, you know, impeached weekly. Right? So this is a political question. And obviously, too, after the midterm, suddenly all the bets are off economically. There's no longer still the same incentive. So how is that going to play out? That's been on my mind lately. How are we going to think about this fall coming up? How's that going to loom over markets? The other thing that's been catching my attention is the increasing, never-ending angst of Europe. There was a new report just came out on the Welt. This is the big German newspaper, that they had just war gamed a scenario in which Russia, only a year from now, think of this: Russia is investing maybe 8 or 9% of his GDP in defense, and they're creating defense assets independently of the Ukraine war. And there was a scenario that they war gamed out in which Russia goes into Kaliningrad, you know, that little exclave up on the Baltic, as a rescue mission for the starving people. Then NATO is starving Kaliningrad. So they go in there and they rapidly take all the Baltic countries before Germany and France can even respond to it, essentially breaking NATO. And the big news is that maybe Russia doesn't have to wait 5 years after Ukraine to rearm. You know what I mean? Maybe they can go right now.
Well, it does beg the question, right? Like, I mean, I mean, I'm going to be way outside my area of expertise here, but just like,
Go
but
ahead.
let me pontificate. Don't let me stop my. Don't let that stop me from pontificating for a minute. I mean, Putin has definitely shown himself to be willing to sort of test the fences when he thinks there's something that's weak and won't hold together. And right, I mean, after Crimea, once he had, Europe hooked on his gas exports, that's when the Ukraine move happened, right? And you can kind of see like now, given the Greenland events of like the past few weeks, he's like, "Oh, how much would NATO really respond if I did something?" Like if it does raise that
And
question for sure.
all he needs is hesitation. You see, you need to respond very quickly to something like that. And all you need is for Europe to hesitate, and then suddenly it's too late.
Yeah.
And then you take that piece, and then suddenly NATO is broken. It's shown that it can be. And you have to remember, here's the problem for Trump, right? He advocates the re-strengthening of all the individual national parties in Europe, right, rather than Europe as a whole. And I think everyone looking at this from the outside realizes Europe will never become an effective military force unless they are united. That's the whole problem. I mean, what's Belgium going to do? What's Austria going to do with its own armed force? So this is a contradiction, really, because on the one hand, Trump wants Europe to be able to defend itself. At least that's what they said in their recent big security document. That's what he said when he was in Davos. But on the other hand, he champions the particularistic parties. We now even have the guy who's now prime minister in Belgium, who's leader of the Flemish. He wants to divide Belgium up into pieces. I mean, come on, Patrick. I mean, do you think a third of Belgium is going to field an effective force here?
Yeah. Yeah.
But you see the problem. So these are things that have been on my mind lately.
No,
Neil,
that's
sorry,
go ahead, David.
Patrick, can I jump in with a question for Neil? And Neil, you're obviously perfectly free to say I'm not going to answer the question or it's ridiculous. But I wrote about Trump at length in our monthly commentary, which is going to get published today. And I did so because I wanted our subscribers to understand the challenges, I think the almost unique challenges of managing money when Trump is in the White House. And so it leads to the following question. If we have a kind of a common scale of 1 to 10, where 10 is we believe that Trump has some fixed principles, and in deploying capital, whether we agree with him or not, we can assume that he's going to adhere to those principles. That's a 10. And a 1 is nothing of the sort. Maybe it's 0 to 10, that it's all expediency. Is there anything in Trump's public or private life that causes you to want to put at least some of his views towards the 10 end of the spectrum, or do they all get sorted close to 0 or 1?
Let me paraphrase your question before I answer it, so make sure I understand it clearly. What you mean to say is, does Trump have an unalterable long-term objective, and he simply shifts around a lot in how he pursues it, or is it all just Brownian motion?
Yeah, or objectives, plural, goals, policy aims that he wants to achieve or advance during his presidency.
Well, this is one of the questions, right? I think I said this earlier. He's in favor of everyone. He's in favor of the people who are huge investors in the stock market, and he's in favor of younger people who would like to invest in the stock market, right? Well, it seems to me there's a difference of interest there. If I were young, I would want to invest in a undervalued stock market. Clearly, I would not want to invest in a stock market with high valuation. So, in other words, a lot of these things you have to choose, and he doesn't choose. He's in favor. He says it's terrible that young people can't buy housing. He wants to do all these things to favor housing. Well, what's his big thing? He wants to subsidize mortgage loan. He basically wants to do what Biden wanted to do, and what the Democrats always wanted to do with student loans, subsidize student loans. Well, it's musical chairs. David, you got a
And actually, even what they wanted to do on housing, to your point, they actually wanted to do a $25,000 right grant for first-time buyers. I mean, this is exactly what
it's pouring gasoline on the fire. In other words, you got a fixed number of assets or college places available, the Ivy Leagues, the near Ivy Leagues, and you subsidize more and more money, you just drive up the tuitions. This has been a gold mine to to the big brand colleges, right? But it's nothing to improve the availability of a college education. The same way with housing. You have to make choices when you're a leader, right? You have to decide this is more important than that, right? So if you want to increase the availability of housing for young people, everyone knows that. And by the way, we had a Secretary of Education back in George W. Bush administration, Margaret Spellings, who said exactly that. You want to make college cheaper, you actually increase the supply of high quality colleges. And she was roundly chased out of her post at the Education Administration by the Ivy League colleges, right? All the accredited universities quickly made sure that she was gone. But here's the point. If he wanted to increase affordability of houses, he would do what a lot of these southern states have already done, right? He would reduce regulations. He would reduce restrictions on the building of new housing. That would necessarily lower prices by people who already own so that young people could buy. That's marginal cost, that's supply and demand. But you have to make a choice as a leader. You have to say it's more important for the young generation to be able to afford to buy a house than it is for all these boomers to just sit on all their high net worth, whether or not they've HELOC'd it away or not, right? So that's my point. He's unwilling to make choices, right? He's unwilling to say that, no, this is really incompatible with that. I think in one case, he has made a choice. And that's what I talked about earlier about this isolation of America, right? That is actually going to force America to do the same thing had he actually came out as a deficit hawk. I mean, imagine if he came out as a deficit hawk saying, in 3 years, we got to close the deficit. Americans, I know this is going to be tough. We're going to have to, he could talk about, $2 and all the rest of it, but he said, but this is for a purpose, right? We need to get back to balanced budget where we were. This is going to necessarily hugely increase national savings. Americans will have to consume less. Our dollar will be, our interest rates will eventually go, will be, obviously, this will be difficult for a while, right? I mean, we'll have to go through an economic transition to make this happen. What he's doing instead is putting on tariffs and closing the world of trade, which necessarily closes it to capital flows at the same time. Yeah. And it's going to achieve the same thing, but through a different, it's almost as though it's like an alcoholic saying, I don't have the willpower to stop drinking, but instead I'm going to go out and burn down the liquor store. So
let me jump in really quickly here, Neil. I want to just sort of push you. I don't want to push you past a logical point, but I'll pose a question, then a comment, and then you can answer the question, right? The question is, why do you ascribe any more permanence to that sort of isolationist view that you just ascribed to Trump? Why would you assume that that's any more permanent in his mind than anything else that he's advanced in his public or private life over the entirety of his adult life? That's the question. My comment is simply that I think the single most prudent way to deploy capital, particularly other people's money in the Trump era, is to assume that no view that he holds or has articulated is truly permanent in his own mind.
Well, I'll tell you why. Because at the very first time that Trump actually started talking about policy, this is actually back in the 1980s when he was a young man, he started talking about we should charge NATO, we should have less of these foreign imports. I mean, this has been a lodestar, right? This sense of independence of America, that we were too dependent on, addicted to the savings of the rest of the world, the products of the rest of the world. They were somehow sapping America's vital energy. And I should say, the people from the rest of the world. Now, right, with the immigration. And I think you could say that, and I think, Patrick, you and I have talked about this, one of the great sources of America's incredible prosperity over the last 60 years has been the fact that we have attracted dollars from the rest of the world, and we've attracted people
Yeah,
who are willing to work like hell to come to our shores and leave whatever dictatorship they lived under gladly to come here. We have benefited from that. Trump is moving us in a different direction. Now, I'm not saying that Trump's wrong. Maybe we overdid it. You see what I mean, David? I'm not saying
Yeah,
this is
sure.
wrong. Maybe we overdid it. Maybe we did become too dependent, but I'm saying it will involve a sacrifice. And I think that there are areas in which Trump pursuing his goal will necessarily involve a sacrifice. I just think in a lot of other things, he doesn't like to. I guess I'm agreeing with you 3/4 of the way, David.
Yeah.
That a lot of things he doesn't like to make choices.
Yeah.
I think, well, I think one thing is consistent. It sounds like, I mean, to kind of maybe try to synthesize something out of what both of you just said. One thing that does seem consistent about him is this zero-sum transactional view of the world, which is how he's kind of viewed trade, right? Like if we have a trade deficit, we are losing, right? With something, we're not gaining anything from it, which I find fascinating because they really miss what I don't know if everyone you probably read this book, Neil. David, you may have as well. I don't know. Barry Eichengreen's book, the exorbitant privilege, right?
Yeah.
And I do feel like that is like we've turned this into a story of black hats and white hats when it's really very gray, right? We've had the reserve currency status, this exorbitant privilege, which to put it in biophysical economics terms, we import very high energy intensive goods and export very low embedded energy currency for it, right? So we have had an enormous privilege that we've been able to underwrite a lifestyle through this.
But Patrick,
At the same time, the trade-off is that we had like, let's say for the sake of argument, like bringing China into the World Trade Organization, introduced all of this labor, which brought that cost down and did hollow out to some degree the middle class in the US. And so there is an element of truth to that.
that's not all that China did. China also scaled up hugely in specific industries, underpriced its goods in order to get scale and dominance, right? Which then they sort of, once they had it, they maintained it, right?
Yeah.
And now we're seeing it as a stranglehold in the rest of the world, like rare earth metals and all the other things it's trying to do now to Europe, basically saying, we have scale in these particular products which you will never match. Submit, Dorothy, surrender, right? So, but I think that Trump was onto that, right? He realized that's the danger of a free trading system when someone enters it with scale in mind, right, and is willing to orchestrate it on a national, if you're an economy that as large as China. So I think, yes, it has been an enormous source of wealth and prosperity for us, but it was a system open for abuse. And I think some countries have abused it. I think China's a big example, and I think Trump was onto that.
Yeah, Patrick, I'll just add, I'm going to be keenly interested to see. I believe that Trump has no fewer than 4 in-person, face-to-face meetings with Xi scheduled on his calendar.
Yep.
I don't know how many months out into the future that is, but I
I
believe
think
there's
it's April,
at
David.
least 4. And I'll simply say it'll be very telling. And we should come back in a future episode and talk about, okay, I think it's like a traditional Catholic marriage where they both recognize they can't get divorced. They just sort of have to make the best of it.
Well, I have a prediction for that, David. It'll end up like the negotiations with Putin, because they all want 2 completely mutually irreconcilable things. She is making it clearer and clearer on these phone calls. He wants one thing. He wants Taiwan, right?
Yep.
And that's the one thing that I think Trump personally would be happy to give Taiwan away. But he realizes he can't, given the security structure and how much GDP is in the Southwest, Pacific, right?
Yeah.
So I just think it's going to go on and on and on. And then they realize, as we're realizing with these endless negotiations between Putin and Zelensky, that there's nothing to negotiate.
Yeah, I agree.
All right. Well, I think you.
Just
sorry, Sam. Go ahead. Maybe one last comment on this, and I'm going to move on.
It was a great discussion. I think going back to David's original question, which was a really good one, is that I think Trump's sort of policy sort of impulses, I think for the first time, I think in a long time in America's history, has overlapped and is in sync with what I think the the established view is in foreign policy and economic policy, some of the institutions. I think if you this great rebalancing that the U.S. is trying to orchestrate on foreign policy and economic policy, which maybe was Trump's original view from a while ago, is now, I think, somewhat the establishment doctrine, whether it's foreign policy and economic policy. And so that's kind of why it has so much heft and weight behind it, because some of the key institutions, be it national security, the military, and sort of the key sort of monetary economic establishments actually now believe that the globalization wave, that thing we've been through the last 30 years was not what we thought it was going to be in terms of benefits. And now they're reversing that. So the alignment between what Trump originally thought to what the sort of the military industrial complex is thinking about it is aligned.
That's great. All right. So in the interest of time, we did have, normally we do some Q&A. One, I didn't get a ton of questions in, but we did get one that I'm going to table because I think it could be a whole episode, Sam. So maybe in a couple of weeks, we'll get Jay Van Sciver on to talk about, somebody on Twitter had responded, or X, sorry, had responded with the, how are we going to power all this, or can the grid handle everything that's happening with these capex investments? And I think that's probably worth a larger discussion and a deep dive back into that topic a little bit, which would be, we'll pick that up maybe in a couple of weeks and do that one.
A provocative suggestion, Patrick, when we talk about that, maybe to think about, right? Which is, once we invest $50 trillion into this totally hyperscaled, enormous machine all over the world with all of these power plants and everything. Think about this. One EMP could melt it all down. and we got to think about this, right? The incredible vulnerability. Everyone's saying that this AI is, is there's no defense against it. And I'm saying, are you kidding? I mean, this thing is very vulnerable. Humans, on the other hand, are tougher. I would actually like to defend humans against AI hyperscaling in our next episode.
Fair enough. We'll come back to that. Good. All right. I'll close it out on a last quick topic then, as we'd like to leave on something fun. Everybody gets to give me their favorite Super Bowl halftime show that they remember. What's the one that stands out the most to you? For better or for worse. Better is obviously, I think, where the spirit of the question was headed, but worse could be also fun too. And I'll start with David. David, what did you think?
Well, I'll give a little historical perspective. I think the sort of the almost unanimous view is that Prince in 2007, in the Rain, when he delivered Purple Rain in Miami, was the best. And I don't necessarily disagree with that, but just for the shock value, particularly maybe with Neil, because I am of a certain age, but one of my favorite performing artists of all time is Eminem. And while he didn't get to do the entirety of the show in 2022, he did it with Snoop Dogg, as I recall, and Dr. Dre.
It was like the anniversary, hip hop anniversary one that they did, right? It was like
exactly.
Yeah.
I think Eminem is just a genius. So, but while I have the floor, I want to say, because this came to my attention 2 days ago, and it was really depressing. I think the greatest rendition of the national anthem ever was Whitney Houston in the '91 Super Bowl. Right? And what I learned is that because of acoustical challenges that they knew about in advance, she sang into a live mic, and that was broadcast throughout the stadium. But what we saw on TV was pre-recorded. And I just thought, how on earth did they do that? And I think she actually later won a Grammy for that performance of the national anthem. So that's a very fun. It
was like 8 minutes long, wasn't it? I mean, it was like really
a very fun Super Bowl memory that I have. And I'll just simply say, in passing the baton here, Patrick, I emphatically didn't put the Janet Jackson, Justin, wardrobe malfunction on my preferred halftime show.
That came to mind when I said the worst.
It's a family show.
That would be the worst. Yeah.
I hadn't thought about the national anthem renditions. I think my number 2 behind that would be the Chris Stapleton's version a couple of years ago, which was incredible.
That was incredible.
Like, they should get him as the halftime show sometime. He's got an incredible voice. Yeah. Sam, I don't know. Do you have do you have one you pick out?
Yeah, I think Davidson highlights some just absolute bangers, but I mean, I think one that I remember well was right after 9/11. U2 did the halftime show. I think it was the Patriots against the Rams, and that was a pretty special halftime show because they scrolled all the names of the victims of 9/11,
That's
and
right.
U2 in a big venue is just amazing. So I think that one would be one that I think was kind of a highlight for me,
There's
as
a
well as the
great
Patriots
secret.
winning.
Do you ever see the movie It Might Get Loud, which is
Yeah,
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 where it's the discussion between Jimmy Page and the Edge and Jack White talking about guitar. And
yeah.
I always love the sequence when the Edge explains, he's like, "Look, I don't write anything complicated. I just write things for very big arenas."
Right, right.
And he shows the example of like playing a riff when the guitar is just like playing and there's almost nothing to it. Then he puts
Yeah,
the effects on it and it sounds amazing. It sounds
yeah.
like a church organ, you know, suddenly at
Right, right.
huge size. Neil, do you have one you'd go with?
Well, like David being of a certain age, David, I'll throw in mine. The two I remember, but I think were very good was the Who and Tom Petty and the Heartbreakers. I think it was right around the time of the GFC. I think that was in 2008, 2009, something like that. And
Yes.
those were the last Boomer performances, by the way, where we saw these people in their late 60s, right? And a testimony really to the long Boomer dominance of the culture, right? You consider how long they lasted.
The Stones are still
Where,
touring.
well, some of them are still touring, but I have to say, contrasting it to the very short duration of Generation X in Super Bowl halftimes. And I often say the one decade with the least singable pop culture lyrics was probably the 1990s when Xers were
That sounds
performing
about
all of
right.
these songs. The one decade that will never be made into elevator music, right?
Yeah, and Neil, you used the past tense when you just said the boomers lasted a long time, but it's ongoing, right? You and I've discussed offline.
Oh,
My
totally.
youngest kids love all the music that I enjoyed when I was an adolescent.
Mine too.
Fleetwood
Mine
Mac,
too.
they're huge fans of Fleetwood Mac.
Yeah.
My daughter's is a nut for it. And they're very popular. Still, they get tons of rotations on
But I mean,
rotations and
think
stuff.
about the cultural dominance. In my work, I talk about archetypes of generations, and how
Yep.
boomers belong to an archetype which generally excels at cultural dominance, right? And certainly this generation has. They've also just happened to be pretty good at duration in the White House. And X also has not really had any. You'd have to count 2 terms of Obama as an almost Xer. You
Yeah.
know what I mean? Born in
Yeah.
61. Otherwise, and we now see the possibility of Vance or somebody who's a millennial seceding. I'm not necessarily saying they will, but I'm just saying it's possible that we could have another kind of eclipsed generation in the White House. And it's fascinating to me to see how some generations are dominant in public life, others are not.
Well, you and
Uh,
Bill drew the line for the boomers at 64, right, Neil? So
Yeah,
Obama's technically a late boomer, right?
yeah, actually, we date boomers slightly earlier for age location. We date them 1961, 1943 to 1960.
Yeah.
Because someone born in the early 60s, they were a little, they don't remember when JFK was shot. They were little, tiny kids still at
Yeah.
Woodstock. Doug Copeland, who wrote the book Generation X, who was born in 61, I think that's really not a bad marker there. So Obama would be right on the cusp, right?
Yeah. Yeah.
that makes sense. Maybe it's recency bias. I'm gonna just close this out. I actually think the Kendrick Lamar one last year was pretty impressive. And the only reason I say that is I thought it was incredible that he kind of took the opportunity to actually have almost like a performance art piece with when you have all those people watching, which I thought was pretty good. But all right.
He's amazing. Yeah.
Yeah, we'll hope that. David, I'm going to send you, if you haven't already heard it, I'm going to send you an Eminem guest appearance on a a song that came out just probably a couple months ago that LL Cool J put out a new album of all people. And I have to
Please
say,
do.
speaking of boomers that or like Gen X that's bordering on boomers. I think LL Cool J would probably fall into that category. And but yet inexplicably put out an album that was really quite good actually last year. And Eminem shows up on it on a track, and it is like incredible that as
I,
he's wont to do. So I'll send it to you.
I would walk 8 miles to hear Eminem. You get the point.
Well played. All right. Very good. Excellent. Thanks, everyone, for joining the show. And we appreciate you tuning in. Tune in for the next one, which I suspect maybe might be February 20th, but that is school break. So I got to make sure I'm not, that I can do that, or we might need to do it a little before that or a little after the 20th. But anyway, in the meantime, you can follow me on Twitter or X at RP Kent. Sam is at Sam of America. David is at D Salem Investor. And I think it's How Generation. Is that the Neil? Is that your fan? Yep. And you can see all our bios on the Hedgeye Asset Management website, hedgeyeam.com. Any last thoughts? Anything else to add, guys?
Great job.
All right. Very good. Best of luck out there. Hopefully we'll see you for the next one. Thanks.